Sanbonani Dumoulin, good evening and welcome to episode 240 of the Private Property Podcast. I'm your host, Uzamantungwa Khumalo. It's a Thursday edition of the Private Property Podcast, and if you're joining us for the first time, welcome to the show. You have missed out on some incredible episodes, so do make sure that you go to our Facebook or our YouTube page and catch up on all the great content that you have already missed out on. And to all our regular viewers, you know how we do it. Every single weekday at 7 p.m., you and I always have an appointment where we tackle a property issue that helps us make better property decisions. And we're going to do just that this evening, where we're going to look at why a home loan pre-qualification matters. But before we get to this evening's conversation, you know how I love talking about the whole host of other shows that you can catch across Private Property's social media platforms. As it is a Thursday, Umbali Noko, an award-winning farmer, will take you through the farming podcast later this evening at 8 p.m. And you can catch that also on Tuesdays. So if you've got any agricultural aspirations, then you want to make sure that that is the show that you tune into. And every Fridays and Mondays, Uchad brings you the Home Shoppers Show, where he takes you through some incredible homes that you can look forward to or even daydream about, that we've also got listed on privateproperty.co.za. Every single Wednesday, Esther Claassen takes you through the First Time Home Buyers Show, where she's always in conversation with property entrepreneurs, property investors who have walked that first-time home ownership journey and have certainly soared. So if you want to find out how you can go from, that one property to growing your property portfolio, then that is the podcast for you. Well, those are some of the great shows that you can look forward to on Private Property and, of course, across our social media pages. Do make sure that you're following us on Instagram, on Twitter, on Facebook, as well as on YouTube. You can follow myself at Zamantungwa_K on Instagram as well as on Twitter. Well, to get us started with our conversation this evening, I want to hear from you at home if you've ever worked with a bond originator, and how that experience was like. Many of you know that I'm a huge advocate of working with bond originators. I've certainly worked with them quite consistently on my own property journey, and I found it quite useful to be able to have that relationship and to know before I even start shopping for a new round of properties how much I qualify for. And because that really does help you, shop around. But this evening, we're joined by Justin Easthorpe, who's a Provincial Sales Manager at oobahomeloans, as we look at why a home loan pre-qualification matters. Justin, good evening, and thank you so much for joining us.
Good evening, Zama. Thank you for having me.
It's only a pleasure, Justin. I think before we even get into, the nitty-gritties, let's look at what pre-qualification is. Before we even look at why it's so important, what exactly do we mean when we talk about pre-qualification?
So what the pre-qualification means is firstly getting an understanding of what affordability you have. Affordability being how much can you afford to spend on a bond repayment. And secondly, also understanding if there's any credit issues. And what we refer to by credit issues is, are there any accounts that you've missed? Are there any judgments or defaults placed against your name on the bureau? So understanding all of that before you start searching and looking for a property, understanding exactly what property price you're looking at, and understanding that you have a clear credit score. So when you find the property, you're confident that you're going to receive a bond.
And maybe then, Justin, let's explore what goes into getting pre-qualified. Before we even look at why it's so important to do so. What exactly goes into a customer or a potential home buyer getting pre-qualified?
So the first thing we need to understand is, as I mentioned, the client's credit profile. So what we would ask them to do is complete an authority to do a credit check and understand what their credit score is. I think everybody or a lot of people understand what the credit score is. Credit score is determined by your credit behavior. So any credit obligations that you have, the banks or any credit provider then sends it through to the bureau and advises the bureau whether you're a good payer or not. And then also understanding what your contractual obligations are. And when we talk in contractual obligations, that's what sort of credit cards you have, store accounts, vehicle finance, overdraft facilities. And in that report also comes your insurance installments. So that's the first step in understanding whether the bank will grant you a facility. The second step is then understanding what your gross income is, what your net income is, and if you have sufficient what we call net surplus income. So let's say, for instance, your bond repayment is 5,000 Rand a month. Can we prove to the bank that you have 5,000 Rand net surplus at the end of every month to be able to afford the bond and any associated expenses with that property purchase? So rates and taxes, levies, water and lights.
And, Justin, you've already touched on this slightly. I want us to then look at some of the things that can potentially get flagged during pre-qualification that could, potentially make somebody's home loan application maybe even take longer, perhaps even get rejected, or not give them enough room to be able to, for example, negotiate with the banks, the interest rate that they may want, or perhaps even negotiate for a higher loan-to-value amount.
So the first thing is credit behavior. The bank will always assess history to determine future. So if you have, let's say, for instance, an Edgar's account where you haven't paid for 30, 60 or 90 days, the banks view that if you can't pay an Edgar's account on time, why should we grant you a facility of such an exponential amount than your normal Edgar's account? So the first thing is what we call payment profile. Are you paying your accounts on time? So if you're 30, 60, 90 days in arrears on one of your accounts, the banks are going to have a concern. If the consumer has a judgment, which means that somebody has passed a judgment onto you because you owe them money, and that's been passed by the High Court, the banks will not grant a facility. That judgment needs to be paid up and rescinded before the banks will even consider any form of loan. There are some times when there's defaults, when you've gone into more than 90 days in arrears on an account, that account needs to be paid up and also needs to be closed. So that is the biggest stumbling block. That is going to affect the bank's scorecard. That's going to affect the sort of loan to value one would obtain, and that will also certainly affect the interest rate that the banks would charge. Something else that the consumer doesn't really know as well is that there's two ways in which the bank does an affordability calculation. The first is the bond repayment should not exceed more than 30% of your gross monthly income. So if we use the example, our gross monthly income is 10,000 Rand a month, your bond repayment should not exceed more than 3,000 Rand. So that's the first calculation. The second calculation is, do you have the 3,000 Rand left at the end of every month after your declared expenses and your contractual obligations?
And Justin, I think one of the things that I've certainly picked up is oftentimes when, some people sort of apply for that home loan, they typically don't have that net surplus, at the end of the month. And would want, for example, to still be granted a home loan facility, because for them, they'll think, look, the debit order will go off, I'll be able to find money, somewhere. Whereas unfortunately, financial institutions don't quite look at it from that perspective when they go about, granting particularly a home loan facility. So then, Justin, let's then look at why people should go the pre-qualification route, because I know that sometimes, oftentimes people just don't even know of bond origination or what bond originators do. And I've always been quite a huge advocate, particularly to first-time home buyers or people who are, still starting off, to work with a bond originator. It saves you so much, and you're able to, negotiate with the banks. But why should we rather, make sure that we get pre-qualified before we even start shopping for that property?
I think the first and most important thing is there would be nothing more devastating than finding your dream home, submitting the application to the bank, and you find out that your dream home you can't secure your dream home. So our advice is always, don't go shopping until you know, because when you fall in love with that house, you're going to want it, and don't put yourself through that through that heartache. And also, when you do a pre-qualification, and if perhaps there are credit issues or affordability issues, the bond originator will be able to guide you through that as well. They will be able to give you advice as to how, if your credit score is low, how to rectify your credit score, what that you perhaps have to pay off or settle in order for affordability to be justified to the banks. So somebody that deals with a home loan every day and understands the bank's credit criteria, it's a good idea to have a discussion with them and for them to perhaps rehabilitate you to a position where you're able to get that bond.
I am this evening in conversation with Justin Easthorpe, who's a Provincial Sales Manager at oobahomeloans, and we're looking at why a home loan pre-qualification matters. And I certainly want to hear from you at home. If you've ever worked with a bond originator to secure a home loan, how was the experience like? And if you haven't worked with one and you know about bond origination, what has been your reason to be reluctant to work with one? Now, Justin, I want to get a sense from you. What are some of the mistakes that consumers sometimes make? I'll say during the pre-qualification, stage, or that as they get pre-qualified, certainly as oobahomeloans, you're able to pick up. So mistakes that consumers would typically make that basically, turns their profile perhaps not in the best way, or would essentially lessen their odds of being able to get the home loan they want at the interest rate that they want.
So the first thing we always say, whether it's a pre-qualification or whether you've been granted a bond, please do not go and buy a car or another house or personal loans, because if you increase your credit exposure, it affects your affordability. So if you are searching and looking for a house and you've been pre-qualified or you've been given a bond, do not go and obtain additional credit, because the banks are able to do a reassessment prior to registration, which could affect them not being able to register the bond. And secondly, if we've issued a pre-qualification and let's say 30 or 40 days later, you go and take out a personal loan or you go and buy a vehicle, your affordability is unfortunately going to be affected. Also, continue paying your accounts on time. Make sure that your accounts are paid on the due date. Avoid taking short-term personal loans. Banks don't like it, no credit institution likes it if one sees that you constantly taking short-term loans to try and get through the month.
And unfortunately, Justin, we're seeing quite a high number of more and more people getting those, personal loans or short-term, loans, especially given the economic climate that we're finding ourselves in right now. And sometimes we tend to not understand the full implications of doing that, especially having, various short-term loans with different service providers. That, of course, is reflected in your profile. And by the time you want to apply for a home loan, you have, credit from, let's say, 3 or 4 different service providers, and you're probably even struggling to make those payments as well. So it's just so important for us to best manage our credit. And I think where personal loans are concerned, try and pay it down and pay it off and close it. If you've got that revolving loan facility, maybe you're closing it, completely, because you keep dipping into it and dipping into it. So really do make sure that you better manage your credit as much as possible. Now, Justin, I want us to look at what then customers can do to, better their odds, especially when we look, of course, at pre-qualification. So what are the good things can consumers do?
With regards to pre-qualification?
Yes.
Once again, maintain your payment profile. Your payment profile when it comes to a bond application or any sort of credit facility is king. So be careful. Do not allow your accounts to go into arrears. And also manage your funds wisely. The banks will always call for a 3-month bank statements. They want to see that once again, we go back to historic. They want to see that you've managed your finances correctly. They want to see that you've got enough money at the end of every month. Don't think that you're going to apply for a home loan today, so I'm only going to give them 30 days bank statements because I've behaved myself for 30 days and think that one's going to get away with it. So just it's so much better just to just behave.
And unfortunately, Justin, I think financially behaving can be sometimes difficult. I mean, I think one of the big things, especially when I look at how, right now in the era of COVID, more and more of us have gone online and we're doing all kinds of online shopping. I mean, to the point where some people say, I have deliveries and I can't even remember when I ordered something, and you're realizing that, look, actually, when you look at your bank statements, you have all kinds of takeaways. Then there's the Uber Eats, and there's, Woolies Dash, there's Checkers 60, and then you've got Take a Lot and all kinds of things. To the point where even that 3-month bank statement is so many pages long because of all those little transactions. So I think this is also, for viewers at home to understand how to also financially prepare yourself so that you're not having all those kinds of transactions going off and also just mismanaging the money that you have. Never mind mismanaging credit, but certainly the money that you have. We are taking your questions and comments at home as we talk about pre-qualification and working with a bond originator on your home ownership journey. We've got a question coming through from Facebook from Jen Noble saying, please advise, if one is pre-approved for a home loan, then gets retrenched, will your pre-qualification stand?
No, it won't. So what happens is that we assess an application on the current situation of a consumer or a potential home buyer at the time of receiving the application. In the event that somebody's financial position changes between the time of pre-qualification is issued to the time that we do a submission or you found a property and you no longer are able to afford it, the pre-qualification is no longer valid.
And Justin, I mean, and this was such a great question, Jen. Thank you for sending it through. How I almost want to ask. I mean, I've done pre-qualification, and then you go. Obviously, you eventually find the property that you want, and you work with your bond originator, sends it through to the bank. At how many stages is either your credit or even work situation being, I'll say, looked at and scrutinized? Because to even Jen's question, I think sometimes we think it's at that, let's call it that first and only stage, whereas you and I both know that it's more than that. I mean, I know, for example, the bank, even before they give you a quote, will call your employer to first verify that you are in fact working there. By the time they want to grant you the home loan, if you accept the quote, they do that again. So what are the different, I'll almost say, stages where those checks are done? And one of the great tips you were even giving us earlier was around not getting additional credit when you're in the middle of that property transaction when it hasn't been registered.
So I've got my train of thought now. The first one is, so credit profile updates every 30 days. So it usually updates between the 4th and the 7th of every month. That is your bureau score. So when we do a pre-qualification, we trust that the information provided to us is truthful and accurate. So we will then accept a salary slip, accept the application and assess the application based on the information provided to us by the potential home buyer. Once they've found the property, whether depending on how far the pre-qualification is done, so if it's more than 30 days, the home buyer will then give us a new set of bank statements and a new set of salary slips. We then do the submission to the bank. The bank then verifies that information again, verifies employment, against salary slip, against bank statements, and does what we call confirmation of employment, where the bank will call the employer to confirm employment. Bond is granted. Bond is then submitted and or given to the conveyancing attorneys to attend to transfer and registration. And prior to the conveyancing attorney will let you know that the bond is on prep and ready to register. The banks then need to give what we call a proceed. So the bank is happy that the financial position of the home buyer has not changed, and the bank is happy that the attorneys register that bond. So there's 4 or 5 touch points at any one time. Verify the information over and over again prior to registration.
And that's why, as Justin so rightfully gave us a tip earlier, that you don't take that additional credit. And I think one of the instances where home buyers typically tend to take that additional credit is when they find out that the quote that they're getting from the bank is, for example, for a 90% loan to value as opposed to 100%. Or in certain instances, you're going to get that 100% loan to value. However, you had not budgeted for your attorney fees and transfer fees. And then when you realize how much it's going to cost you to pay for those fees, then you go and want to take out a home loan facility or even extend your credit card limit. So it's really crucial that you've adequately saved up for the purchasing of the property and all the associated costs that go to it. Going back to your, going back to your questions and comments at home across our social media platforms, we've got a question coming through from YouTube, and this one is from Umziwake George Tekwane, who asks, can a PTY Limited make a pre-qualification?
So it wouldn't be a certificate that we would be able to issue. oobahomeloans is working on something at the moment. But what is a good idea is to start talking to your originator and providing them with the financial statements. So what we like to do is prepare a self-employed individual, whether they're purchasing in a company or whether they're self-employed, and we need to analyze financial statements to determine affordability. So what we would then do is start speaking to that individual. Please, can you provide me with your 2 years audited financial statements? Can I have your management accounts? Especially this time of the year where management accounts should hopefully have been finalized, the audited financial statements for 2021. If they're not, please start preparing them. The banks are going to call for them. And also then, depending on where your financial year ends, we also might call for management accounts, depending if they can't be older than 3 months. So there are quite a bit of documents one requires when purchasing a property in a legal entity or self-employed and drawing an income from a legal entity. So it's important and vital that you start speaking to us way before so we can prepare you as to what the banks are going to require.
More of your questions and comments at home coming from Facebook. This one is from Ulindi Sichabela asking, what is needed to pre-qualify self-employed clients?
Okay. So once again, we won't issue a certificate, but we will prepare you. So what the minimum documents we require is 2 years audited financial statements on the business that you're drawing an income from. If your financial year end is in February and we're now in May, I'm going to call for 3 months management accounts, end of February, March, April, May to May. So I want 3 months management accounts. I would like to see 6 months bank statements and an accountant's letter verifying your income. And in some circumstances, we may call for what we call an RTA 34, which is what you're declaring to SARS as your drawings from the company.
And, I think just one of the things that I'm certainly realizing is that more and more people are looking at obviously different and creative ways of buying property. We always advise that you want to buy it, in an entity. Some people are, of course, self-employed, and that's why I love this question from Lindy, because more often than not, people who are self-employed do tend to struggle to secure a home loan, and some of them just tend to not know what the administrative work is required prior to securing that home loan or making sure that they have a relatively smooth home loan process. And I think it is so important for us, certainly even as you outline the things that are needed, that we are on top of that kind of admin. Because one of the things, and my viewers know, I'm very bad at admin. I'm shockingly bad at it, and I try to outsource certain components of it. Sometimes I'm more successful than other times. However, when you are self-employed, the reality is there are just things that you need to be quite on top of, and you cannot afford not to have or not to, you can't afford to drop the ball on certain issues. Justin, as we begin to wrap, any final tips for our viewers at home when it comes to best preparing themselves in the event where home ownership or getting a home loan is on the cards for them for 2021?
So I think if it's 2021, understand your affordability, understand what you can afford to buy for. The only way that you're going to be able to do that is to preferably speak to an originator, and also ensure that the pre-qualification that you're being issued, there is a credit check linked to that as well. It's vital that we understand, or anybody understands, what that potential home buyer's credit score is. Then move to the affordability. And if you are not ready due to circumstances that perhaps you didn't know, or there is an affordability matter that we need to deal with, start speaking to an originator sooner rather than later. We've got lots of time until December 2021 to be able to get you a property.
And I think, one of the things, Justin, that I was saying to you off air is, just yesterday I was actually advising someone that, look, they want to get an investment property this year, and they're not in a rush. They want to be getting it later on in the year. And they were only thinking of, getting pre-qualified and whatnot later in the year. Right now, they were trying to decide which area to look into, the strategy. And I was like, look, you should actually get pre-qualified now. It's going to be your second home loan. Speak to an originator now. I'll put you in touch with an originator. You want to get a sense of what your financial position is at this moment, and if there are any potential snags that will be, picked up during that process. And in the event where they are, you have all these months to make sure that it gets sorted. Maybe there's an account you had paid off many months or many years ago that's still reflecting on your profile for whatever reason. You're able to make sure that all of that administrative stuff is sorted out before you actually are about to then, sign on the dotted line and are now about to buy that property. So it's so important, as you've outlined, that we start early and we prepare ourselves. And so even if you're not buying, in this quarter, and perhaps it's something you want to do later on in the year, do make sure that you speak to an originator, reach out to the team at oobahomeloans, and you want to make sure that you best prepare yourself for the journey ahead. Well, Justin, we are going to leave it there this evening. Thank you so much for joining us. Thank
you very much for having me.
And that is Justin Easthorpe, who's a Provincial Sales Manager at oobahomeloans. Well, that's it from myself, Zamandungwa Khumalo, the rest of the Private Property Podcast team. We are, of course, back on your screens for the Friday edition of the show tomorrow evening at 7 p.m. Until then, hoping you're staying home and staying safe.
Hi, I'm Nobuntu Webster. I'm an entrepreneur. I moved to Sandton to pursue a dream. I've based myself in Sandton because it's the gateway to Africa. The neighborhood of Sandton is alive. It's alive with possibility. It's got the most amazing vibe. If you need to get anything done, this is the place to get it done. One of the things I really love about Sandton is how it lights up at night. If those lights don't inspire you, nothing will. Sandton is the richest square mile in Africa. It has everything, from shopping in Sandton City to 5-star hotels like a Michelangelo for my international guests. It works for me to be here. There are so many designer stores. There's an abundance of clothes and everything else to choose from. Being an entrepreneur, I travel a lot, so it's really convenient to be able to get onto the Gau train, and in 15 minutes, I'm at the airport. Business is important to me, but my family is everything, and that's why my family and I are looking to move into one of the suburbs in Sandton. Sandton has some of the most exclusive homes in the country, in places like Hyde Park and Sandown. A little bit less fast-paced is your suburbs like Bryanston and Rivonia. Bryanston was a natural choice. It's got great open spaces, it's safe. My son's already at a really good school there. Sandton gives me great variety, from an awesome nightlife to beautiful places for lunch to spas where I can really relax and recharge. Things happen in Sandton, and that's my neighborhood.